Okay, so basically at this point, I'm guessing that all of you already watched the course, and if you didn't, it's okay. I'm just gonna go over some of the things that I look forward whenever I'm taking an entry on a specific trade. I'm gonna be explaining to you what are the confirmations that I look forward in order for me to gain confidence in taking either a buy or a sell. We're gonna go over how to find market direction in the market, and what to look for when entering a trade, and how to identify important key levels whenever trading in the real market. So if you guys go to TradingView is basically where I analyze everything regarding to any specific stock or instrument that I'm looking forward to trade. So in this case, we are always trading on US 30. But I'm gonna look for another, let me just find another server for US 30 so I can do everything from the beginning, from the get-go. I'm gonna put this on white just so it's more clear to you guys. Okay, I'm gonna put this right here. I'm gonna leave this right here. Okay, so I'm guessing that you guys are a little bit familiar with TradingView. TradingView is basically the app or the software that I use, or every single trader uses to analyze the market, make their predictions, market analysis, technical analysis, whatever you want to call it. This is the bread and butter of trading. This is where we always have to look forward to whenever we are taking a trade. So in this class, I'm gonna be explaining to you what I look forward whenever I'm looking forward to take an entry. And as I was saying in the PowerPoint presentation, the first thing that I have to look forward is market structure. Okay, so if you know about market structure, you know that it can be either bullish or it can be bearish. Bullish means that it's going to the upside, and bearish means that it's going to the downside. Um, so in this case scenario, the market is potentially bullish because it is going to the upside. And in if it were to be bearish, such as this case scenario, this would be a bearish market structure. So you guys can see this is bearish because it's coming to the downside. This is bearish market structure because it's respecting lower lows and lower highs. So we have a lower high, lower low, lower high, lower low, lower high, and lower low. Okay, so I have a picture, like a more clear representation of what I'm talking about. I'm gonna give you guys the PowerPoint as well, just so you guys can look back to it. Basically, market structure, a bullish market structure is creating higher highs and higher lows, higher highs and higher lows, meaning that the market is going towards the upside. And in contrary to that, bearish market structure is when the market is creating lower lows and lower highs, lower lows and lower highs. That is taking the market towards the downside. Bullish, remember, bullish is to the upside and bearish is to the downside. So whenever I'm looking forward to take an entry on certain trade, I always have to look forward to see what the market structure is like. I don't just go into the market and just look for to gamble my day and just take either a sell or a buy. No, I have to be 100% sure of what I'm doing in order for me to be confident enough to take an entry, because at the end of the day, I'm risking my own money. So I want to be as accurate as I can be. So I'm gonna go over the 4 hour time frame. Oh, this is something that I just wanted to mention to you guys as well. Whenever you guys are looking for market structure, always do it from the 4 hour time frame and then change up to the 15-minute time frame and then change up to the 5-minute time frame. The 4 hour time frame and the 15-minute time frame. When I'm talking about time frames, I'm speaking about this. Whenever you are looking in TradingView and you are looking the 4 hour time frame, This is how the market looks in every single 4 hours. Every single candle is a 4 hour time frame. So this happened in the last 4 hours. This little green candle happened in the last 4 hours. And the previous red candle happened in the last 4 hours. So every single candlesticks means that that movement happened within a 4 hour time frame. Okay, so this is what the market looks like on a when I'm zooming out on a 4 hour time frame. This is what I actually have to see whether the market is bullish or bearish. And as you guys can see, lately we have been very bullish on the 4 hour time frame, because if you look closely, we are going to the upside. So that means that anything that I would be taking either for next for the rest of the week or for the next days, I'm gonna be taking a buys, because we are in a bullish market structure. It would be kind of dumb for me to take sales unless I get a clear opportunity of taking sales and see that the market is about to shift. But since we are going in the upside direction, I would only be taking buys. I want you guys to get that. I want you guys to understand that I only take buys on a bullish market structure unless we break a structure. What do I mean by breaking structure? So let's say that we are going to the upside and the market decided to. So let's say that we are going to the upside and the market decides to shift and break this trend up to the downside, comes back and retest, and then makes a shift in the market structure, then that's the only case scenario where I would be taking sales. But anything regarding to the bullish market structure, the market being bullish, I would only be looking for buys. And the same thing for sell for a bearish market structure. I would only be looking for sales in a bearish market structures. As you guys can see, this is a very clear representation of the market being bearish because it's coming to the downside. And exactly what I was talking to you guys about right now. The market was bearish, and what made the market become bullish? This little break of structure. So I'm gonna explain it to you guys a little bit more in depth. So we were in a bearish market structure, okay? We were bearish, and the moment the market decided to break out of this trend, come back up, come back down and retest. As you guys can see, it went up, then it came all the way back down to retest this little trend line, and then it gave me a bullish engulfing candle. This is a bullish engulfing candle. If you saw the PowerPoint, you know that this is a bullish engulfing candle. Then that's when the shift happened in the market. So that's where I would be looking to take buys. I would be looking forward to take buys right after the break of structure happened and when it went back down and retest and created the bullish engulfing candle. As you guys can see, this would have been a trade in this case scenario, targeting previous highs. I hope I'm not going too fast on this. Are you guys understanding of what I'm saying? Can you put in the chat whatever if you guys are following with me or not? Just so I can move forward. Okay. Are you following Bert? Oh, okay. So do you guys have any questions so far of what I'm explaining to you regarding market structure when I'm looking forward to take an entry? Do you guys have any questions? Okay. Okay, perfect. So yeah, just for the record, remember guys, whenever the market is going to the downside, it means that the market is bearish. And the market going to the upside, the market is bullish. Only take buys on the bullish market and only take sales on the bearish market unless market structure shifts. Okay, that's something that I want you guys to write down or or memorize it as you guys the more you can, because this is very important, and this is something that I look forward to every single morning when I'm trading. And now I'm gonna explain to you a little bit more in deep what confirmations I look forward whenever I'm taking a trade. So that's one of the confirmations that I take. I'm gonna be writing them down right here. Confirmations for taking a trade. Well, I'm just gonna call it confirmations, just to not make it too long. Okay, the first confirmation is I look at market structure. So it can be either bullish, or bearish. That's the first confirmation that I look forward to. And I also have to know whether the price is at a support level or at a resistance level. Support level or resistance level. And then I'm going to explain to you guys a little bit more about how to identify support and resistance. I know this is very basic, but it's very, very, very useful whenever you're using it in the real market, because just think about it as the support is. Just think about it like as a house, as a house. The support is the roof of the house, and the support is the floor of the house, and the resistance is the roof of the house. So think about it like this. Let's say that this is the floor of a house. This is support, and the roof of the house would be resistance. So there's a lot of confluences when it comes to resistance, because there could be a lot of support and resistance key levels in different time frames. But let's say that we are looking in this specific area. So let's say that we were right here. Let's forget about all of this, and let's just say that we were right here, just for the sake of this explanation. Okay, let's forget about everything on this side and just focus on this. Okay, so what happens? This is another support. So support, you basically is where a key point where the market has bounced back from a certain specific level. As you guys can see, we have already bounced from this point 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. And it's the same as the roof of this resistance right here. We have been 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. Usually, whenever there's more than 7 touches within a certain support or resistance level, that's considered a legitimate support or resistance key point. So basically, think about it like this. This is a home. This is the floor. And let's say that you are bouncing a ball. You bouncing a ball to the upside. What's going to happen when you bounce it to the upside? It's going to come to the downside, which it happened right here. And it did right here as well. And it went all the way back down, and then it broke support. It broke the roof, so it went all the way to the downside. And when it came right back up, it bounced back, and then it went up to the next, and then it hit the roof of the house. So what happens when it hits the roof of the house and it doesn't comes back up? It's because it's breaking resistance, is going above the ceiling, coming back down to retest, and then going up to the next roof, to the next ceiling. I hope you guys are with me. Are you guys understanding what I'm saying, or should I explain it a little bit more slower? Because this is kind of easy for me already, but I want you guys to make sure that you guys are 100% getting this. Can you put it in the group chat? Hello? Okay, a little bit slower. Okay, so basically, I'm gonna try to find another way of explaining it. Basically, like this example, okay? So when the resistance is broken and retest, how would you know it will continue to go up? Good question. You would have to expect a retest in the same area, and another confirmation would be either if it's going to the upside, you would be looking for a bullish engulfing candle, or if it's going to the downside for a bearish engulfing candle. For example, what happens here? Price went all the way back up, price went all the way up, it came back, he came back to the floor of the house, and then he broke above. And do you see this little candle? Do you see how this little candle make the market come all the way back down to this area, to the roof of the house? Do you see it, Bert? Okay, so when it went all the way back up and then it came back down, it drove the market to this specific area. So what happens when I'm looking forward an entry in this scenario? How do I know it's not gonna come all the way back down? Because at the next candlestick in the next 4 hour time frame, a green bullish engulfing candle was formed. So what happens when a bullish engulfing candle forms? It usually means that the market is looking forward to go to the upside. Because if it would have been making the market go to the downside, it would have made a bigger bearish candle, meaning that a bigger red candle would have meant for me to maybe think about it twice about going all the way to the upside, because maybe the market was going to come all the way back down. Do you get it? Okay, so basically, when the market broke above resistance and it came all the way back down to the price point of the resistance, it came back and retest. It went all the way back up, as you guys can see. Are you with me, Rhino? Okay. So I just wanna be sure on that. So what happened? So what happens here? So now the price created another resistance and used it as support. So what happens when there's another support level? There's obviously another resistance level, which means that when there's another floor, there has to be another ceiling, which is basically what happens here. So when the price broke above, came back down to retest, guess what happened next? It went all the ball bounced from the roof, from the floor all the way to the ceiling once again. And when it didn't break above the ceiling, what happens when you shoot a ball up on the floor and then it comes all the way back up to the ceiling, it comes right back down. Are you guys with me on this? Like, do you guys get it? Okay. So basically, this is very, 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 very easy. Unless I get two confirmations of when the price might not want to come back and retest, that's when I will be looking forward to taking an entry for breaking a structure, for breaking either support or resistance in this case scenario. For example, I'm going to give you the perfect sample right here. So so let's say the price came all the way back down to support. I would expect price to continue to go back up. But what happens? There's a big bearish engulfing candle. Do you guys see this? This bearish engulfing candle. That's like 100% confirmation of me that the market might go to the downside. So what happens when this big bearish engulfing candle happens, and then it comes back down to the support level, but it doesn't breaks above? It means that the market was supposed to go down. So in this case scenario, when this big bearish engulfing candle happened, and then it came back, and then it came right back to the support level to retest, the best case scenario for me to take a trade would have been right here, to take a sell right here. Because what happens? The market is not breaking above resistance, and then it's giving me clear direction that is ejecting this key zone, this support. So if it's not breaking above, what's gonna happen? Price is gonna come right back down, which is exactly what happened. Do you guys see this? So this would have been the perfect trade idea if I would be if I were in this time frame trading. Are you guys with me on this? Do you guys get this? Do you guys understand it? I want you guys to be honest with me. If you guys have any questions, you guys are free to ask. Ask away. How about you, Bert? Do you get it? So bullish engulfing candles usually indicate market is going up. Bearish engulfing candle market may go downside. Correct. After it breaks above either resistance or support. For example, if this I'm gonna give you a clear example. Okay, so this is a big bearish engulfing candle because it's bigger than the previous green candle, which is right here. But what happens is the market is not going to the downside because it's respecting this key zone. Do you see it? It's respecting this key zone. That's why the market is not going to the downside because it's respecting support. So what happens next? After a big bullish engulfing candle is formed, which is right here, then that's a clear indication that the market is not breaking, it's continuing its way up to the next ceiling. Do you get it? And okay, and this happens the same thing right here. Remember, support and resistance are always being made within the market. You have to be able to identify them because let's just think about it as a house that you are throwing a ball into. So you throw a ball in the floor of the house, it's most likely it's gonna come to the roof. But what happens when it breaks above the roof? It goes up to the second floor. I don't know if you guys understand it. So that's basically what's happening here. After resistance is respected, as you guys can see, resistance is respected. We have a little bit of downside, but then a big bullish engulfing candle happens. That's a clear indication of the market is going to go up. So what happens? When the market breaks above resistance, such as this case, scenario, because it's breaking support, but then it's coming right back down to resistance and it's coming back in retest. As you guys can see, look, comes right back down and then it breaks above. Do you see this little candle right here? It comes right back down. Do you see it? The red candle? It comes right back down to retest. The same specific key zone, the same specific roof, the same specific floor is coming back to retest. And then what happens next? What happens? A bullish engulfing candle. That means that the price it may go to the upside. You guys get it? Are you guys with me? Hello? Makes sense. Yeah. Yeah, so this is just like one theory of trading, but these are one of the most basics and fundamentals theories of trading. But I want you guys to always remember these fundamentals because this is very, very, very key whenever you are trading in the market. Most of the time, the market likes to play around. Like as you guys can see, this is a very, very respected key zone support level. But what happens? The market always likes to play around. So what happens here? It breaks down, it breaks below, and then it goes all the way back down as it was supposed to. And the reason that happens is because banks usually like to liquidate other people or other traders. That's why you have to be able to identify when to look for confirmations of the price going towards the direction that you are predicting it will go up to. Do you guys, does it make sense? So does it make sense, Rhino? Do you get it? If you guys have any questions, you guys can ask me. You guys are more than welcome to ask anything. I'm here to answer all your questions. So do we get support and resistance so far? Should I go to the next confirmation, or can you put it in the chat if it makes sense completely, just so I can jump to the next one, or you want me to explain a little bit better? Are you guys with me? Okay, so can I move to the next to the next step? Okay. So now I'm gonna come back to the keynote. So basically, this is a better explanation. That's why I found this picture and I wanted to put it in the PowerPoint, because this is basically what I'm explaining to you. Just in case I wasn't 100% sure that I was going to be able to explain myself, this is basically the clearest picture of what I'm trying to say, what I'm trying to explain when I mean breaking support or resistance. Remember that I'm gonna give you guys this PowerPoint. I'm gonna put it in the Discord or the Telegram group chat, or probably in both, but just so you guys have this for the record. But yeah, this is a market structure, and basically these are the confirmations to take entries, trading live, engulfing candles on a 5-minute time frame, and I always look at price action. Okay. So whenever, let's say that we are trading US 30 tomorrow, okay? When would I be looking for to take a trade? So as you guys can see, we are in the 4-hour time frame. So usually the price is going to the upside. But what happens? The price doesn't always go like a straight line to the upside. It's always doing this. If you guys can see, price never moves correctly. It never does. It always makes a little bit of a down and then to the up, a little bit to the down and a little bit to the up. As you guys can see, this is basically what's happening here. It's not going in a straight line. It's going a little bit up and then down, up and then down, up and then down, up and then down. So I'm expecting for tomorrow for price to get to the next resistance key level, which is right here. So if I were to be trading today, if the market would open right now, what confirmations would I be looking forward to take in this case scenario? Okay. So I'm gonna explain it to you a little bit better right now. If I were to be trading in the real market right now when the market opens, also remember, when the market opens, there's a lot of volume, which means the price moves fast, like super fast. Right now, the price is not even moving, as you guys can see. Why? Because the banks are closed. We are basically on the Asian session of trading. And since we are trading a United States index fund, we have the most volume after the New York Stock Exchange open at around 8:30 a.m., which is why I usually trade this specific instrument at 8:30 a.m. when the market opens. So if I were to be trading tomorrow, like let's say we are about a trade right now, okay? We are in a 4-hour time frame. So remember, look for your confirmations. I forgot to put this right here. I forgot to put this. Always do this on the 4-hour time frame. 4-hour time frame. And same as here, 4-hour time frame. Those are the confirmations that I look forward on the higher time frame. But whenever I'm gonna take an entry, I look in the smaller time frames. When taking entries basically means, I know that you asked me this question, Bert. An entry basically what I mean by entry is whenever I'm gonna take either a buy or a sell. Basically the entry point of when my trade is gonna start. Either if I'm predicting the price is gonna go to the upside or to the downside. Okay? That's what I mean when taking entries, taking the trade, either to the upside or to the downside. So when taking entries, I always look forward smaller time frames, smaller time frames, which is usually 15-minute or 5-minute time frame. That's usually when I look forward when taking an entry. Okay, so I'm gonna put it right here. So if I were to be trading in the real market right now, I would go to the smaller time frame, which is this one, the 5-minute, and then I would mark down my support and resistance key zones, which in this case scenario, this would be, in this case scenario, this would be a very respected price, respected price point for support. You guys can see it's respected. This support was once a roof. After it broke above, it came right back down, respected it. That makes the support. So what happens? When would I be taking a trade? Would I be taking a trade right here? No, I would wait when the market opens. So at this point, I would mark my next key zone level, my next roof, you can call it. I would mark where the market could potentially go. So if it's respecting, I'm expecting the market to come all the way right back up to this key zone level. But what happens? I'm not gonna wait all these. I'm not gonna wait the market to make all the move all the way back up. No, I'm gonna wait, and then I'm gonna mark a trend line. This is a trend line because it's the trend that the market is going towards to. So after price breaks above this trend line, it breaks the structure because it's coming like this, from the back and up. After I see this, the price to break this trend line, in breaking resistance as well, comes back and retest, that's where I would take my entry point. I would take my buy if it breaks the trend line and if it breaks the previous resistance level. And also if it comes back and retest it and gives me a confirmation of a bullish engulfing candle. Always remember that, guys. And I will target previous highs. So what's a previous highs? Okay, a previous high is the last high created by the market. Basically, if I'm looking for the previous highs in this specific key point, it would be this one right here. And where would be the next one? This one right here. And the third one, this one right here. So basically, this would be my target if I were taking buys in this specific case scenario. And my stop loss would be like around this key level, meaning that the price is looking forward to respect the trend and coming all the way to the downside. Are you guys with me on this? Do you guys understand that? Please put it in the chat if you guys understand what I'm trying to say here, because this is very important. Just put it in the chat. Put a yes or something. Okay. Okay. So that would be the case scenario if I would be taking buys. But what if I obviously you remember this saying, you cannot predict what the market does. You can only react to it. What does that mean? That means that you cannot you cannot make the market go up if it doesn't want to go up. So if it doesn't want to go up, what would be your second scenario? That's why I always tell you guys, buys above certain key point and sells under certain key point, because what happens if the market doesn't want to go up? I'm not going to tell you guys buy when the market is obviously not wanting to go up. If it's going to go down, I'm willing to have a second option, a second opinion in case the market wants to go to the different direction. So where would I be looking for sales in this case scenario? The only place I would be looking for sales if its price respects this key zone, this key zone level right here, and comes all the way back down and comes back and retest this previous key zone level, which is the previous support. And that's where I will be taking myself. Remember, the support still matters a lot. So if the price doesn't want to go continuously go up, comes right back down and retest this exact position, this exact support level, I would be taking myself right here after I see the price respecting respecting this key zone and forming a bearish engulfing candle. That's the only case scenario I would be taking a sell. Are you guys with me? Do you guys get this? Okay. Yeah, makes sense. Okay, perfect. So basically, this is like basically everything that I look forward to whenever taking either a buy or a sell. Obviously, there's a lot of more you can say factors that a lot of traders might have. Like a lot of people trade using Fibonacci. I also trade using Fibonacci, which is this thing right here, is the Fibonacci retracement. I also trade this, but if I want to keep it simple for you guys, this always works. Support and resistance always work, and I think is the easiest to trade. But you guys always have to be looking for the confirmations that I gave you. If you guys want this to make sense and to actually become profitable trading, always look for these confirmations that I just gave you, because these confirmations are basically what's either gonna make you profitable or what's gonna, if you break these confirmations, if you just take anything just to take a trade, you're basically just gambling your money away, and it does not work like that, because trust me, the market will eat you, and it will eat your money too. So I don't want you guys to start trading just like a gamble and lose all of your profits. Like, I don't want you guys to do that. I want you guys to have a plan. Basically, I'm giving you the plan that I have. I'm giving you the plan. All you have to do is respect it, and respect whenever you see an opportunity or not, because some days there might not even be an opportunity to trade. Some days the market just stays fluctuating within a certain key level, and it doesn't go either up or down. That is completely okay, but you don't trade whatever is not in your trading plan. If you don't follow your trading plan, 100%, most of the time you're going to be losing all your money. So I want you guys to have the reason why I'm giving you this is because I want you guys to have a plan, a trading plan, and respect it. Respect the trading plan, and you will be okay. Remember, in trading, a lot of the time you are always going to have losses, and that's completely okay, as long as your trading plan is profitable enough to cover up for the previous losses, because everybody loses. I don't know any single trader that never takes a loss. You are always taking losses, but you have to make sure that you are 70% winning rate, covering for the 30% losing rates that you have. So if you are losing 4 times out of 10, but the other six you have winning days, that means that you are profitable 60% out of 100. So that means that you are up 10% of your account. You have to see it that way. You have to make sure that you have a profitable trading plan, which is basically what I just gave you right now. Like, I just gave you a good trading plan. If you follow this, you just saw it with me. Like, it's very, very simple. It's very, very, very it's very, very usable. And a lot of people, believe it or not, they trade using this basic, simple strategy. And a lot of people are profitable with this, because you are basically just following price action. You don't have to do all these crazy indicators, these crazy Fibonacci key levels, none of that. You have these crazy order blocks, or supply and demand, which is what they call support and resistance. Some traders, is basically the same thing. Follow this plan, and I promise you that you are going to be profitable. Just follow the plan and stick to the plan. Embrace your losses, but make up for your winnings. Okay? So that's all I wanted to say. Do you guys get it? Do you guys have any questions? Anything that you guys want to ask me? Please put it in the chat if you guys have a question, anything in regarding to that. And everything that you guys are seeing right now in this class is basically what I do every single day in the market. And you guys are gonna see a live with me. So basically what I'm giving you is basically the trading plan, in which we are going to be trading for the probably next 2, 3, 4, 5 months from now. So basically this is how I trade. Basically, I just give you my whole strategy on the Zoom call. Are you guys with me? Just put it in the chat, just so I know that you guys are following up with me. Do you have any question? Do you guys have any questions at all? Don't forget that I'm also going to be giving you this specific recording. I'm going to put it into the Discord just for you to come back to it later on and just watch it. If you got time later on, or tomorrow, or within the next week, you can just always go back to the Discord and rewatch these recordings. I have them all in the Discord under the weekly coaching calls tab of the Discord. So everything is in there. I'm gonna put this out there as well. But yeah, this is a very, very, very important lesson. I would have I would have liked for everybody to be in this lesson, but not a lot of people showed up. But that's okay. The good thing is that I have it recorded. But yeah, basically this is what I wanted to explain to you guys in the class my trading plan, what I look forward when taking an entry, market structure, trend lines. That's about it. Now we have to put this plan in action in tomorrow's market when the market opens at 8:30. So yeah, if you guys don't have any questions, just put it in the group chat just so I can finish this Zoom call because I have to download it and then I have to put it in the Discord. But if you guys have any questions, I'm here to answer any of you guys. Just put it in the chat just so I know. And I'm also gonna be giving you this uh this PowerPoint for today's class. So you guys have any more questions? No questions. Appreciate it, bro. Are you doing live tomorrow? Yes, I'm trading tomorrow. Every single day except Friday. I don't trade Fridays because it's very, very volatile, and I don't like to lose my profits from the whole week on a Friday. So that's just not my day for trading. I trade every day except Friday. But yes, every single day at 8:30 a.m. Okay, so yeah, this is gonna be it for this Zoom call, for this weekly coaching call. I hope you guys got some value out of this. I hope you guys watch the course. I know that you don't speak Spanish right now, but I know the course is in Spanish, but I already recorded the whole course in English as well. I just have to make some final edits and put it up in the WAP account, but it'll be there. Just give me this week, it'll be there. But regarding anything, you will have the course by the end of the week and on English. And if you have any questions, you can always reach out to me. You have my phone number. If you have any questions, just shoot me a text. I'll do my best to answer all of your questions. But other than that, I think this is it for this video. I'm gonna see you guys tomorrow at 8:30 a.m. And okay, have a good night, guys. Take care.